Well, we've made it through October and into the back end of 2021 we head. We've had earnings season. We've had the inflation narrative continue to evolve. We're right on the verge of COP26 and the Global Climate Summit. And there's a lot of questions about what's in store for the rest of the year up ahead. Today we're going to be unpacking 3 growth stocks to watch on the ASX for the month of November in 2021. It's going to have a bit of a lithium feel to it today, just to be related to COP26 and of course the discussion surrounding climate change, but most importantly this clean energy and renewable energy transition as the EV adoption picks up pace. It's a fascinating time. We'd love to know your thoughts, so drop in a comment below what stocks you've got on your watch list for the month up ahead. And if you do enjoy the video, don't forget to hit the like button. Feel free to share it out, and we make daily videos, so if you're new around here, welcome. Make sure you've subscribed and turn your bell notifications on so you don't miss any of our daily episodes. With that, it makes sense for us to kickstart into stock number 1, Arizona Lithium. So Arizona Lithium, or ASX AZL, was formerly known as Hawkstone Mining. You might be familiar with that original ticker, HWK, but it's recently spun out their gold and copper assets into Diablo Resources, another ASX listed company under DBO ticker, and now they're purely focusing on their Big Sandy Lithium project, which is located in Arizona in the US. It's located, interestingly, in quite close proximity to both Tesla's operations in Nevada as well as California. Of course, these are key components within the broader US supply chain to develop not only the battery cells, but of course the electric vehicles that will help to fuel this EV adoption around North America. There's a lot of interest in this location. Interestingly, Arizona Lithium themselves are actually looking to develop out and extract their lithium via sedimentary clays. It's not your conventional lithium brine extraction process or hard rock spodumene project. It's via sedimentary clays, and their initial resource is actually only 4% of their total land holdings, so they've got a significant opportunity for further exploration and the opportunity to expand their total usable resource. It's a fascinating time. Before we do dive in, a reminder that I'm not a financial advisor. Nothing we cover on the channel is financial advice. The stocks we discuss are obviously not buy recommendations. These things that we discuss are just interesting companies to reflect on. They're each coming into the month of November with different backgrounds, coming in from different points of view, but hopefully it is a good starting spot for you to do your own research from. So before digging deeper into the Arizona Lithium share price movements and why there's so much excitement surrounding AZL, it makes sense for us to take a step back and think about what are the tailwinds. We've discussed these before on the channel, but we know about these higher level tailwinds really driving the sector ahead at the moment. We know there's a strong demand side driver with the rapid EV adoption. It's been stronger than anticipated, particularly led by Asia and Europe, but the US is rapidly growing in its adoption of EVs, and of course Biden and their investment into infrastructure and the ability to incentivize and subsidize some of these purchases is only going to help to accelerate that transition. But then on the other side of the coin, there is a supply shortfall. On that supply side, we know that after the boom in 17 and 18 and then the crash in 18, 19 and then 20, there wasn't a significant amount of investment coming online. Mines were either put into care and maintenance or projects were delayed until the economics started to stack up. And so there is a shortfall that's predicted to continue to expand moving forward. Then we also know there's a significant focus on localization of supply chains. Of course, there's a range of different materials that have been identified as of strategic importance. Lithium is a material, because it's such a key component in so many different aspects of the supply chains, that has been identified by the Biden government as a critical material. And that's why there's a lot of investment going on into the lithium and the broader EV battery supply space in the US and the broader North American market. But of course, all of those drivers and tailwinds behind don't mean anything unless you've got a good quality product ready to sell. Manufacturers want to make sure that you have good quality product, and Arizona Lithium have done some initial test work with Hazen Research, and they've been able to produce a battery grade lithium carbonate at 99.7%, so a battery grade product. This, of course, is critical. Still in the early stages, they're doing initial test work. They want to move towards a pilot plant as well and continuing to focus about that moving forward. But they've got lithium recoveries of 90% so far with minimal downstream losses. Of course, as we know, they've got a resource that they can continue to explore and continue to dig into. So it's going to be fascinating to see how this next period of growth moves forward. But so far, the initial test work looks good and it's attracting a lot of attention in the ASX AZL story. And as you can see here, after being spun out of Hawkstone Mining and the transition towards the Arizona Lithium moniker, there's been a significant amount of uplift over this past month. It's not been isolated to Arizona Lithium. There's many companies in the lithium sector that have been flying, from Lake Resources to European Lithium. Of course, Vulcan Energy and Liontown are always in the discussion as well. But Arizona Lithium have really been one of those leading lights in the sector. From the low of around 4 cents at their peaks, it was up by over 100% over the past month. The share price rose to around 9 cents, and they even got a speeding ticket along the way because of the rapid rate of uplift in the ASX AZL share price. And so with all of that, a reason why it'll be interesting to watch how Arizona Lithium go up ahead in November is there's been discussions that they've recently entered a trading halt surrounding a capital raise. The Australian Financial Review produced this article at the back end of the week stating that they'll be tapping institutional investors for reportedly $12 million, with the funds set to go towards further drilling, a pilot plant, and a research facility, and the purchase of water rights. Of course, this is surrounding their flagship Big Sandy project that we've discussed, but it is going to be interesting to see how the market reacts to this once they come out of the halt. The offer's priced at around a 15% discount to their previous uplift. Of course, it makes sense when you've had such a significant uplift in your share price to potentially try and capitalize on that and be able to raise funds at a better rate than previously. And so it looks like Arizona Lithium are trying to be in as well-funded of a position as possible to really capitalize on the tailwinds behind the lithium sector and the significant resource that they currently do have at the Big Sandy project. We'd love to know your thoughts on it all, so drop in a comment below what you think about Arizona Lithium, as well as any of the other companies that we discussed in today's video, and what's on your watch list for November up ahead moving forward. And on to stock number 2, Magnis Energy. ASX MNS has had a rapid uplift in October. We know that they're developing a vertically integrated supply chain, looking to be a key player in the lithium-ion battery value chain. All the way from mine, they've got the Natru graphite project located in Tanzania, through to the battery technology, they've got a stake within C4V, and then all the way through to battery manufacturing as well, with their flagship IM3NY, a New York factory that's looking to come online moving forward, and then they also have ownership stake as well in a Townsville factory as well. It's an interesting proposition. Of course, we know that there's a significant focus in the development of battery technologies moving forward. And we know, as previously discussed, that demand is only going to continue to grow exponentially. And so Magnis are hoping to feed into these tailwinds. And so just having a look at the Magnis offering, we can see here that they have 3 different locations. The New York battery plant IM3NY is their flagship project. They're fully funded at the moment up to 1.8 gigawatt hours of production and are hoping to scale that potentially to above 30 gigawatt hours over the next decade. They are moving forward. They provided a recent update that they've gone further than 30% of the plant development. They've still got a while to go, but they are moving towards semi-automated production and then ultimately automated production at IM3NY next year is the goal. The Natru Graphite project is shovel ready, and so they're hoping to potentially announce their first offtake in this quarter at the back end of 2021. And then the Townsville battery plant as well. Feasibility study was approved. This was actually supported by the Queensland government. Of course, it's positive having regulatory support. And ultimately, the aspirational goal is to work towards 18 gigawatt hours of production once it's up and running. And so just building on that New York battery plant status update that we did discuss, they provide a battery plant update each month, and they provided the New York status update that it's 33% complete now. So it's about a third of the way there. As you can see here on the timelines, the first half of 2021, the focus was on a manual process and just making sure that they could actually produce initially, and now moving towards a semi-automated process with more announcements to come surrounding this at the back end of this year. And then ultimately they want to move towards that fully automated process. And as mentioned, they are fully funded to 1.8 gigawatt hours. There's been a range of different developments. They recently provided their quarterly update. So as mentioned, 33% complete. There's been renewed interest in their Natru Graphite project with a North American group progressing offtake discussions. They've recently secured funding as well, so they're well funded, and they also do have a range of options that if they are in the money at around 50 cents will be exercised, which will help them have further funding as well to fund their development. And a number of permits were actually approved this month as well, which is important. Permit approvals are important on 2 different dimensions. Firstly, of course, it's important because it helps to de-risk the project. If you don't have the permits, there's uncertainties or question marks about whether you'll be able to get off the ground. But secondly as well, it actually just helps to facilitate the development and the movement towards production, because without the permits, there can be bottlenecks in the development, in the actual uplift in production. And so now they've had these permits granted. These were some of the last things they needed ticked off, and now they're able to continue moving forward as they look to bring IM3NY online. Then another interesting factor as well is they've lodged an application to list on the OTC markets, moving from the pink slips. And of course, it will provide greater access to shareholders, greater access to capital, and more awareness about Magnis's project moving forward. However, all of that is critical as they look to bring IM3NY online moving forward. But of course, it's not about just having a factory, but it's important to be able to provide and develop a product that customers will actually want. Magnis Energy on their board, I've got Dr. Stanley Whittingham, who was actually the creator of the lithium-ion battery. He won the Nobel Prize for this invention, so it's a significant understanding and technological know-how that they're able to bring. But along with that as well, they've developed with their technology partner C4V. C4V have developed a patented and commercialized biomineralizing process that actually adds a significant uplift to cell voltage to the popular LFP chemistry. We know that Tesla is looking to implement LFP chemistries in their Model 3s, and other manufacturers around the world are starting to look towards LFP. It, of course, has an improved safety profile. It's less flammable, potentially some better uplift as well in terms of results. But IM3 and Y are able to produce a product that has 15 to 20% nominal cell voltage uplift compared to the conventional LFP chemistry. This, of course, is important, and having a 10% stake in C4V means I'll be able to continue to benefit from the upside that any technological advancements and innovations will be able to provide from C4V moving forward. And then on to stock number 3, Vulcan Energy. ASX VUL is a company that we've spoken about before on the channel. Of course, they're developing the world's first zero carbon lithium project. They're developing this out of a geothermal brine lithium project in the Upper Rhine Valley in Germany. And the direct lithium extraction project gives them revenue, interestingly, from two different sides of the coin. Firstly, of course, through the production of a lithium hydroxide product, but also renewable energy, which can be either through the form of heat or electricity, depending on what time of the year it is. The energy from the extraction project can be sold back to the grid, which is another revenue stream, and ultimately underpinning it all, as mentioned, it's a zero carbon lithium production. And why this is so important is, of course, there is a supply shortfall, and so manufacturers want to get their hand on lithium so that they're able to produce the products that they can get out to their customers. But we know that embodied energy is an important part of the supply chain and the equation. There's carbon emission focuses from governments around the world. Carbon emissions are becoming more and more critical in all of these discussions. So to be able to produce a zero carbon lithium project is going to be enticing, and there may actually be a premium potentially afforded to these types of products moving forward as manufacturers are more and more cognizant of the embodied energy of their production of their products. And so just having a look at the Vulcan Energy process, we can see here that the wells are drilled into the deep hot lithium-rich brine resource. Geothermal brine is actually already used at the moment in Germany, but of course, what Vulcan Energy are trying to do with the lithium extraction is unique. They've got a team who's very experienced in the space already. The renewable electricity that is generated from the process is sold back to the grid. And then ultimately the renewable heat, electricity, and brine is transferred to the direct lithium extraction plant. The brine is then re-injected once the lithium has been extracted from it. Lithium chloride is produced and transported to the central lithium plant, and ultimately lithium hydroxide is produced and distributed to the EU market. Vulcan Energy is still early stage. They're still a few years away from their production. They've got a pilot plant up and running now, but they still are a few years away from production. But of course, there's a lot of interest in the opportunity that a company like ASX VUL can feed into with the accommodative tailwinds behind it, particularly with the EU government being so focused on trying to bring down the embodied energy and trying to catalyze significant adoption of EVs around the total region. And so there's been a range of positive good news from this past period from Vulcan. Firstly, they had a binding lithium hydroxide offtake term sheet signed with LG Energy Solution. They are the largest producer of lithium-ion batteries for EVs in the world. They supply products to many different OEMs, which is a major factor. It was for an initial 5-year term, which has the ability to be extended for a further 5 years. And then building on top of that, just recently, Vulcan signed another offtake agreement with Umicore, who are a leader in cathode materials. And of course, this is significant because it helps to de-risk the project, but also shows that from the initial discussions, the initial qualifications, that their product that they can produce in their pilot plants or initially is enticing for manufacturers. And so it'll be interesting to see if there's further discussions or further negotiations moving forward on these types of fronts. Building on that as well, Vulcan Energy did raise capital recently. They raised a $200 million round with institutional investors. This, of course, is significant because it means they're well funded moving forward as they look to continue to develop out their processes and move towards commercialization over the next few years. They also did have a SPP, which gave their shareholders the ability to get involved with it. But underlying it all, having that support from existing and new institutional investors, particularly many that were ESG focused, helps to underpin the opportunity that Vulcan Energy is able to feed into. So investors will be watching to see where ASX VUL heads from here. However, unfortunately, it hasn't been all sunshine and rainbows because at the back end of last week, Vulcan was a recipient of a short seller report. Of course, we all know about the effect that short seller reports can have on companies. Of course, sentiment can drive share prices in the short term, and uncertainty and fear can, of course, drive share price movements as well. So Vulcan did have the ability to respond to the report through a comprehensive ASX announcement. You can read that in your own time, but as you can see here from Vulcan's managing director, he provided a bit of an insight into where they were positioned after reading that report. He stated that Vulcan is a world-class company dedicated to decarbonisation with world-class technical experts. In the pages following, as part of that announcement, they detailed in significant technical form why the claims in the report were misleading and incorrect. Their goal is to be the world's leader in sustainable lithium production, to create the world's first fully integrated renewable energy and battery raw minerals company. Of course, as we know, uncertainty and fear can drive markets in the short term, and we know that emotions can drive it as well. So Vulcan share price, ASX VUL, did come off by over 15% on the day after they came out of the trading halt. But really, investors will be watching to see where ASX VUL heads from here. How will the market digest it once they've had a weekend of reading through the report and then the response? How will they be positioned, and what do they think this means for the story up ahead? Vulcan do have a world-class leadership team and a world-class board. They've got significant capabilities and technological know-how in-house, and so many people are relying on the fact that they've got that understanding. Of course, the companies who have signed their offtake agreements have done their due diligence, so investors will be hoping that this period will pass and they're able to continue to look ahead as the process towards commercialization carries on. We'd love to know your thoughts on it all, so drop in a comment below what you think about everything that's happened in Vulcan's story recently, and where do you think ASX VUL heads from here? If you did enjoy the video, don't forget to hit the like button. Feel free to share it out as well. We make daily videos, so if you're new around here, welcome. Make sure you've subscribed and turn your bell notifications on so you don't miss a daily episode. It's a fascinating period. COP26 is just around the corner. We've seen the discussions surrounding renewable energy and this transition towards a cleaner, decarbonised society continue to pick up pace. So many companies playing in the sector are likely to be beneficiaries of this. We'll continue to watch how this evolves, not only into November, but moving forward as well. As you guys know, I'm not a financial advisor, and these stocks are not buy recommendations. They're just that general discussion to be a starting spot for you to do your own research from. But hope you did enjoy the video and look forward to hearing your thoughts on it all. Thank you for joining us. For now, stay well and happy investing.